You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 27th day of March, 2023. Hope you had a great weekend. Thanks so much for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 live broadcasts every trading day. First live broadcast is reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, you can do so by simply going to mytradingiq.com and just click the button at the top of the page. Now that's from 9:30 a.m. to 11:30 a.m. Eastern. Our members and trial members have 2 hours of live training every trading day. If you're on the trial, if you've not taken the trial, you really need to take a look at everything our lifetime members have access to. On the trial, you have access to everything a lifetime member has access to. That's not just the live training room, but also unlimited one-on-one private mentoring. You'll learn the methodology and strategy we teach, which works across all markets, all time frames. You'll be able to use our indicator set, which is fluid across all markets and all time frames. You'll receive the Logic 247 alerts, the concierge trade alerts, everything except the members only workshop on Thursday night. And there's no credit card required. Now, when the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break and then come back at 12 noon Eastern for this broadcast. This broadcast is open to the public. You don't have to be a member. You don't have to be on a free trial. Anybody, anywhere on planet Earth, an internet-connected device, can join this broadcast. The best way to join is to go to mytradingiq.com, scroll down to where it says Afternoon Broadcast, click the link, complete the 30-second registration form, and you're done. What will happen every trading day going forward, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform where you'll have access to the question box so you can ask questions and participate in the discussion. Of course, there's going to be days where you're out of the office, away from your desktop, on vacation, but you still want to join the afternoon broadcast live. Simply point your browser to our YouTube channel. Now, it's very easy to remember, youtube.com, you already know that part, /CFRN. youtube.com/CFRN. Now, not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there's over 2,200 episodes available for your educational and viewing pleasure. And for anyone who's new to the world of CFRN, It's a great way to get to know not only who we are today, but who we were 6 weeks ago, 6 months ago, a year ago, 2 years ago, even more. Scroll back, pick days at random, just listen in a little bit. What you'll discover is a thread of connectivity, a thread of continuity woven through each and every daily broadcast. This isn't just some other trading room or some other set of indicators. This is a very vibrant community, a family. And while you're on the trial, you'll have an opportunity to mix and mingle and rub shoulders with our traders who've learned our methodology and strategy and use our indicators and have themselves become consistent traders. I encourage you to take advantage of that. And remember, during your trial, you have access to one-on-one mentoring sessions so that at the end of your trial, you're able to determine if what we do is right for you, and even more, do you have what it takes to become a trader? Very different from these websites you might visit where you buy an indicator set and it comes with a PDF. Wow. And you get a hearty handshake and a virtual slap on the back, and that's the last you hear from them. We provide support around the clock via Telegram. You can always call us. You can always email us. Our number is 949-42-EMINI. Our email, support@cfrn.net. If you finished your trial and you're ready to become a part of the family, you do that here at eminifuturestrading.com. So let's open with a word of prayer, as we do every day. Our scripture today is 1 Peter chapter 5, verses 8 through 9. Now, I always read it to you from the Message translation. I'm going to read it from the King James today and the Message, because the King James Version is probably the one you're most familiar with. Be sober, be vigilant, because your adversary, the devil, as a roaring lion, walketh about, seeking whom he may devour. Whom resist, steadfast in the faith, knowing that the same afflictions are accomplished in your brethren that are in the world. Now that same scripture from the Message translation. Keep a cool head. Stay alert. The devil is poised to pounce and would like nothing better than to catch you napping. Keep your guard up. You're not the only ones plunged into these hard times. It's the same with Christians all over the world. So keep a firm grip on the faith. The suffering won't last forever. It won't be long before this generous God, who has great plans for us in Christ, eternal and glorious plans they are, will have you put together and on your feet for good. He gets the last word. Yes, he does. As a child, you may have played a game called Red Rover, send Sarah right over. Now, if you did, you would have two separate lines of kids standing opposite each other. Each person would hold the person's arm to the right and left of them to form a human chain. When you would call someone out from the other line, they would break away and run as fast as they can to attempt to break through a link or arms. If they did, you got to add them to your team. If they didn't, you had to join theirs. The goal of the game was to never break as a human chain. Your life can feel like this often. It can feel like life keeps sending life-sized issues to you. In the end, how do you keep the chain from breaking? How do you stand firm and secure? Let's look at the Word of God, see why it's important, what we should do, and if we're the only ones dealing with it. I've already given you the scripture. Keep a cool head, stay alert. The devil is poised to pounce and would like nothing better than to catch you napping. Now that's 1 Peter chapter 5, verses 8 through 9. So ask yourself this question. What do you think it means to stand strong in your faith? And make this declaration. Speak it out loud. God, I choose to stand on your word, not my worries. Join me in a word of prayer. Heavenly Father, come before you today, recognizing that we are in a constant battle against the enemy who seeks to devour us. Thank you for the reminder in 1 Peter. The devil prowls around like a roaring lion, seeking someone to devour. Help us to be alert and sober-minded, ready to resist him. We ask that you would give us the strength to stand firm in our faith, knowing that we are not alone in this battle. We trust in your promise that after we have suffered a little while, you will restore, confirm, strengthen, and establish us. We pray for your protection over us and our loved ones, that we would be shielded from the attacks of the evil one. Help us to put on the full armor of God, so that we may be able to stand against the schemes of the enemy. We thank you for your grace and mercy, which are new every morning. May we be rooted and established in your love, knowing that nothing can separate us from your love. It's in Jesus' name we believe and pray. Everybody said, amen. Amen. Well, happy Monday. Hope it is a happy Monday for you, whoever you are, wherever you are. Let me give you these numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Unfortunately, we've got some mixed markets. We like to see them all green or all red. As futures traders, it doesn't matter if they're green or red, as long as they're all the same color. That gives us some of our best high probability, low risk trading opportunities. Now the Dow's positive, up 164 points, but the NASDAQ is in the red, 71 points. S&P 500 is up 4, the Russell 2000 up 9.5. In the commodity basket, crude oil up $1.99, trading 71.25 last. It's a gain of almost 3%. Gold, on the other hand, down $23, trading 19.59 last. Silver down 18 cents, trading 23.15 last. In the Asian markets at the close, the Nikkei posted a gain of 91 points. Shanghai dropped 14. The Hang Seng fell 347. That's a drop of 1.75%, the Hang Seng. And in the European markets at the close, FTSE up 66, 1%. DAX up 170, 1%. The CAC up 63, you guessed it, 1%. So that gave us a mixed day in Asia. It was a green day for the UK. And so far, it's a mixed Radio Monday here in the US of A. If you missed Friday's broadcast, you can find it at youtube.com/CFRN. In fact, we did 2 videos on Friday. One was the live training room, and then the second one, Garrett joined us after we did some live trading on the TradingView platform. And if you didn't catch it live, you should catch it. Garrett and I are in the process of putting together a podcast, things they don't want you to talk about. So we'll probably get canceled pretty quick, but that's okay. We're going to put it on our own platform so nobody can cancel us. But I digress. Let's move forward. Okay. Logic 247. That is our 24/7 around-the-clock E-mini alert service. It includes not only the E-minis, but also crude, gold, silver, euro, and bonds. Now, last Monday was brutal, to say the least. What day was last Monday? Last Monday would be the 24th. Is that right? I scrolled there. Am I that far out of touch? Oh, the 19th. Okay, maybe that makes more sense. Okay, we started out last week with 67% of the actionable alerts from Sunday night stopped out. And then Monday got a little better, 50%. Tuesday or Wednesday as of 7 a.m., 44%. And then Thursday, 45%. By Friday, we had dropped to 14%. Now, over these 242 weeks, we've issued over 13,700 individual handcrafted alerts. The logic alerts are based on current price action. They can come out at 2 a.m. or 2 p.m. as opportunity presents itself. And there's time built into each alert so that you not only receive the alert, but have time to go to your 30-minute chart, see the window of opportunity that the alert represents, so that you are prepared to take action with your smaller time frame, whatever time frame you choose to execute on, when price reaches the entry, long or short, of the alert. And so, since the markets opened last night at 6 p.m. Eastern, we issued 10 alerts as of 7 a.m. I've issued more alerts today. So Valerie will update the recap this afternoon. But this is how we stood as of 7 a.m. 10 alerts issued, still waiting on 3. 7 actionable alerts, of which 1 or 14% would have been stomped out based on not risking more than $300 per contract per trade, less when possible, based on market structure. In a very simple 3-step process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Over the 243 weeks of Logic 247, we've averaged 20% or less being stomped out based on that risk profile. So we're not only teaching you how to trade, but we're actually giving you trades while you learn. That just seems to make good sense, right? Shortens the learning curve. Now we still have our original alert service, the concierge trade alerts, and they're a little bit different. Number one, they're based on historic price action. And when historic price action meets current price action, that's where you'll find some of your best high probability, low risk trade opportunities. The CTAs are published shortly after the Globex Open every evening, Sunday through Thursday. The markets opened last night at 6 p.m. Eastern. This static report was published at 6:30. So all of our members and all of our trial members had these numbers at 6:30 last night. If you're not a member and not on a trial, since this broadcast is available to the public, if you want to grab a screenshot of these numbers, you can do that, because we're going to walk through very quickly each and every one of these markets. Now, what are you supposed to do with these numbers? First thing you do when the report is published is make note on your 30-minute chart where price is at this time. It's always going to be between these two numbers. If price gets above the 30-minute BBC, then it's attempting to reach the long target. If price is below the 30-minute BBC, it's attempting to reach the short target. It's really that simple. Now, once you determine which target price is trying to get to, you got to look left to spot potential obstacles, be they support or resistance based on whether you're trading long or short, and know over time, you'll learn over time how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. It's above the BBC, it's trying to reach the zone above. If it's below the 30-minute BBC, it's trying to reach the zone below. Resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, the weekly zones are published Monday morning at 6:15 a.m. Eastern. We've published the zones for our members since December 14th of 2009. Once you've been with us for a while, you'll realize that the weekly trading zones are one of the most powerful tools in your trading toolbox. Along with making note of where price is at the time the report is published, draw a line in the sand, in this case at 40.27, and a line in the sand at 39.68. Those serve as great visual cues to help you stay on the right side of the street, whether you're trading long or trading short. Again, grab your screenshot if you don't have the numbers, and then we'll head over to the daily chart, which is where we always start. And why do we start with the daily chart? Well, the answer is always the same. Institutional traders who move price look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So no matter what market you trade, it could be the S&P, it could be Walmart, it could be Bitcoin, it could be the British pound. Doesn't matter. Price flows the same across all markets, time frames. On this day, we talked about the beginning of another major leg to the downside. We've been in a downtrend now for a year. The low of the downtrend was put in October 13th, right here. And that bounce took us to a high on February 2nd of 42.44. And when we failed to put in a higher high, and blue and climbing turned to red and falling, that's when we began to talk about the move to the downside. And it unfolded in a logical manner. If the markets look chaotic to you, if you have no understanding of why price moves the way that it moves, you've come to the right place. Because we're going to teach you that. You're going to learn to look at a chart and not see chaos, but be able to read it like a newspaper or even a mystery novel. And in an uncanny manner, you'll be able to determine what the next high probability move is on any market on any time frame. Remember, price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. So once we drop below this green line, which is called the BBC, that just stands for bull-bear cross. The price crosses below it, we're bearish, anticipating lower prices. Price gets above it, we're bullish, anticipating higher prices, lower prices, higher prices. The other indicator, the CFMA1, I just refer to it as red and falling, blue and climbing. One is bearish, the other bullish. And so where does that bring us today? Well, we talked about the 3-day head and shoulder pattern. Okay. Price overnight came back up to test that right shoulder and sold off. So now what we're waiting to see is, will price get back below the BBC? If so, there's potential support at the 38% fib retracement, then blue and climbing, then the lower Friday, and then the 50% fib retracement. We bounced 1, 2, 3 times at the 38. 1, 2, 3, 4, 5, 6 times at the 50. Now resistance overhead is the high of the day, the high of Thursday, and then the high of Wednesday. That would bring us to the top of this price channel. Support, low of the day, 38, blue and climbing, low of Friday, 50%. So whatever market you trade, look at your daily chart. It will help you identify where major areas of support and resistance are. So as you go to your smaller time frame, you don't get confused with tunnel vision. I mean, you've got to understand the bigger picture. And that's another thing that we'll teach you, is how to effectively use multiple time frames. It's very important. Let's go to the 30-minute chart of the S&P, our roadmap chart. Now the zones that you see on my charts today are last week's zones, because the new zones are published Monday morning at 6:15 a.m. Eastern. So any alerts issued last night were based on last week's zones. Any alerts issued today are based on this week's zones. And on tomorrow's broadcast, my charts will reflect the new zones. The vertical line on the chart separates today, Monday, which began last night at 6 p.m. Eastern, Friday from Thursday. And you'll notice how when price drops to a zone, we expect support. When it rallies to a zone, we expect resistance. Support, resistance, support, resistance, etc. So the market opens and it runs right up to the CTA long target. Now I talked to you about drawing lines in the sand. 40.27, 39.68. Makes it real easy to see where price is trying to go. We had a pull back to the BBC. The pullback holds more often than not. This one held, and we hit the target again. Pull back to the BBC, hit the target again. Now, this was the Wall Street opening candle, a doji. And that speaks volumes, okay? Typically, the opening candle on Wall Street is quite often the largest candle of the day. And it quite often dictates the direction the market will move that day. But a doji represents indecision. We ran up overnight and tested last week's zone at 40.35/36. But we failed to take out the high from Thursday and certainly from last Wednesday, Fed Day. Price is now, so we hit the zone, or we hit the target, hit the target, hit the target, hit the target and the zone. Now we're below the BBC with red and falling. So what are we looking for? Lower prices. We need to see price get below the step line. Okay, something like 4,007 down to 4,005. Be a nice way to get your goal for the day. Or you could be more conservative, wait for price to drop to 39.96 and trade it down from there. The zone below, based on this week's zones, is at 39.86. Now, in order for price to get to the short target, we've got to take out this low, this zone from last week. And you'll notice this zone lines right up with this bullish cross. When you have a bullish cross that leads to an extended move, first time price revisits that area, it will almost always be good support, at least the first time down. The opposite is true of a bearish cross. On the Dow, here's where we opened last night. We ran up plenty to get your goal for the day. Didn't quite touch the target. Pulled back to the VVC, spiked it, found support at the zone. Remember, when price drops to a zone, that's what we're looking for. Ultimately, the pullback held, even though we spiked it, because both of these candles are still touching the BBC. Then price gets back above the BBC. Red and falling turns to blue and climbing. We hit the target. And there's that Wall Street open. Pull back to the BBC. The pullback holds. Hit the target again. But now we have an issue. Blue and climbing has turned to red and falling. We want to be very careful with any trades on the long side. I'd want to see price get to 32,700 and possibly trade it up to 32,735. And then if we look here, we'll see we've got resistance. Okay, this is really so important. Today's Monday. That resistance right there, it looks so random. But when you understand market context, today's high was established last Thursday. People will tell you, oh, you can't trade support and resistance anymore. That's old-fashioned. It's horse and buggy, man. There's indicators and oscillators and algorithms, 90% of which do nothing but confuse you. I have enough voices in my head telling me what to do. I don't need 10 different indicators and oscillators on my chart arguing with each other over whether I should go long or short. If you keep your chart simple, uncluttered, price will show you the way. No matter what market you're trading or what time frame you're trading it in, the clock on the wall is always price. On the Russell, here's where the market opened, ran up to the target, pulled back to the zone, consolidated. Only three things happen at a zone. 70% of the time it's consolidation, 20% of the time rejection, 10% of the time the slice. So we pull back to the BBC, or we pull back to the zone, hit the target again, pull back to the BBC, hit the target again, pull back to the zone, and we came just a couple ticks shy of hitting the target again. That's the Russell. On the NQ. Now remember, when I gave you the numbers from around the world, the NQ was the only one of the major indices in the red. So we opened last night, moved higher, pulled back to the zone, found support, got above red and climbing, pulled back, or red and falling, pulled back to blue and climbing, and ding ding, hit the target. So we come back down, find support at the zone, we spike it, yes. Where do we spike it to? Right here, just above that bullish cross. You'll notice when price hit that previous bullish cross, what did it do? It bounced. That's what we expect. Second time down, it traded through it. Now we're headed for last week's zone, which we've already seen has been good support. So we hit the long target, we hit the short target. Kind of like paint by numbers. Remember that as a kid? Crude oil. Here's where we opened last night. We pulled back to the BBC. Got a nice leg up and a retracement. And then a leg that took us to the target. A retracement. Now where are we headed? The last week's zone. So even though our traders put this week's zones on their chart first thing Monday morning before Wall Street wakes up, you don't throw out the old zones until it's evident that the new zones have now taken sway over the markets. Because price is going to trade from zone to zone to zone to zone, as it has done every trading day since December 14th of 2009. And way before that. That's just the first day we published. It's built into the market. Okay. All right. So we're just a few ticks away from the next zone overhead. But again, these are last week's zones. 7190/95. The next zone overhead this week's way up at 7220, which is just right. 7220. Okay. All right. Gold. Here's where we opened last night. Come down to the zone. Consolidate. Remember, that's what's happened 70% of the time. Then we trade through the zone, hit the target, and where do we find support? To the tick at the zone. That gives us a bounce. Back to the zone. This time we spike it a little bit. We consolidate. We get rejected. We've pulled back to the BBC, which we expect to be resistance. You see, when price drops to the BBC, we expect support. When price pulls up to the BBC, we expect resistance until proven otherwise. So we got resistance overhead at the BBC and potential support at blue and climbing. So where does that put your window of opportunity? Well, you can be clever and try that. But what I recommend is something more like that. Okay? Fair enough. Silver. Quiet. It was the open last night. We gapped higher on the open and dropped quick. Got below the BBC, hit the target. Pull back to the BBC, hit the target again. Found support at the zone. Bounce back to the BBC, hit the target again. Found support at the zone. And right now we're consolidating at the target just below the BBC. Now, this may not look like much, but a 2-penny move is worth $100. And if you've earned the right to trade 10 contracts, that's $1,000. $1,000 a day It's not a bad way to earn a living. The euro, here's where we open. Got below the VVC. We touched that random line. Oh, to the tick. Got back above the BVC. Did a leg and a retracement and a leg. And where's price trying to go? Trying to go to the long target. In order to do so, it's got to take out this high. And it's got to take out this high. This high. This high. And before you know it, we could be there. And here we sit with a wick sticking up above the VBC. How we close today is going to be really important. Anticipate support at the 38% fib. Blue and climbing. If we break blue and climbing, your next support level is at the low of Friday. Then the 50% fib retracement. Then there's the 62. And then there's the bottom of the channel. So with that, I suspect Michael is ready. Michael, are you ready? Pulling all Michaels. 9 out of 10 new trades will fail. Now, people go, dude, that's such a bummer. Why do you put that on your main screen? Because I want people to be aware. Without a teacher, without a mentor, without a structured learning program, without a definable edge, a proven set of indicators and strategy, that's just a statistical fact. So we've plugged that hole. 2 hours of live training every trading day. Now when Michael comes on here in a minute, he's going to give us a recap of exactly what happened this morning in the live training room. And then at 1 p.m. Eastern, we're going to go live on the TradingView platform. And we'll trade live for 30 minutes. If you use TradingView, be sure to follow us, CFRN, and be sure to tune in for the live stream. You can view, we're going to trade live on the TradingView platform. Now you can watch it from our GoTo platform, our YouTube channel, or you can actually go to the TradingView platform itself. And at the top where it says community, click that, click live streams, and that's where you'll see us trading at 1 p.m. Eastern. You can ask questions on our GoTo platform or in the question box or the chat box on the TradingView platform. I don't monitor the chat box on the YouTube channel. Okay? So, we're waiting on Michael. He must be having troubles logging in. Now, I wish I could tell you that the past... Oh, yeah.
I'm having trouble hitting
That's easy for you to say.
hitting the microphone button.
All right.
I'm having trouble hitting the microphone button. All right. Here we go. Logged in.
Okie doke.
Ready to roll.
We're ready.
There. That should do it.
Okay. Looks good.
Okay. Locked and loaded. Here we go. Good afternoon, everyone. Good afternoon, everyone. Today is Monday, the 27th day of March, 2023. If you have not taken a free trial with us, and you want to take a free trial with us, go here to mytradingiq.com, and right here you will find this thing. It's a sign up for free 5-day training and trading. 9:30 to 11:30 Eastern time. When you do that, you sign up for the trading platform. The platform that we're going to be using in here that I'm going to show you right now is going to be primarily TradingView, but I'll show you DT Pro as well if I get into some of the weekly trading zone stuff. But you should definitely download the trading platform. And if you're going to download the trading platform, look at the trade rules. They're defined pretty clearly right here. The setup video, how to set up your TIQ context with TradingView. And also rules for the entry, the risk management, and the exit. Every trade only has 3 parts to it. Those are the 3 parts. And there's rules for all of them right here. All right. All right. So that is what you should do to sign up for the trial. Now, this morning was not a great trading day. It wasn't easy to trade today, I'll say that. All right, we did get our goal pretty early on, but we gave it all back, and then we got it all back, and well, almost all of it. But anyway, this morning we were, well, first, if you're going to read this, read all CFTC risk disclosures down at the bottom of it. Today is the 27th day of March, as I said, and we made 28 ticks in the NQ. We lost 4 in crude, we made 4 in gold, and made 14 on the ES. That put us at 315 on the morning session. So today it took 18 minutes and 4 trades to get to $390, and at that point we're at that point we're up $390, and we took 19 trades this morning. So on the month now we're at $15,477 a contract. That is 1 contract, 2 hours a day. So for 19 trading days, we're averaging $814 per contract for a 2-hour trading day on the month. Right, on the month. Now on the year, we are down here averaging $522 per contract per 2-hour trading day. We've gotten our goal for the day on 57 out of 58 days so far this year, and that puts us at $30,277 a contract. Right? Got our goal 57 out of 58 days so far. All right. Now, if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, right now you'd be trading 3 contracts trying to get your goal for the day, and we'd only had to work 13.73 hours so far this year. You'd have averaged $1,103 per hour for those 13.73 hours, right? $1,100 an hour. Now that number, as we finish out this week and get into next month, we're at 4 contracts. That number is going to grow a lot faster. This number down here is going to grow a lot faster. With 4 contracts, as we start getting our goal for the day, instead of being $100, it's going to be $400, and so it's going to be $400 in a couple of minutes, and so this number is going to be growing a lot faster. Okay. All right. So let's get into what we did and didn't do. On the gold, we had a few trades in here. Let's do this. Okay, on the gold. Come on, here it goes. All right. We'll start out over here. Our very first trade on gold was right in here. We had a break even. Now the markets were not easy to trade today. Look at how flat the gold started out right here. Then finally we got some trend. It started to move, and we had an opportunity right there. We had a break even on that one. Went completely flat again. Then in here I started training, and it started to make the first big move. We didn't have any trade setups in there, fortunately. I didn't miss anything in there. But I did miss a couple right here that I probably wouldn't have taken anyway. On the third one here where it pulled back a little deeper, we did get in that. We got a couple of ticks profit on that. And the next one, we got a couple more ticks profit on. And that put us at +4 on the gold. And that was all that we did with gold. You can see it had a lot of really flat periods today. So there really wasn't a lot to do with gold. And gold, we're still going to be staying in this contract till probably the end of the week. All right, we're not going to roll out of gold until probably the end of the week. The crude oil, we had about the same number of trades in crude today. Crude did have a little bit of movement. We were able to get just a little bit of it in a couple of spots. But it also started out right here, really flat. We took our first trade right in here. A few minutes in, we just got 1 tick. That might have actually been our very first trade. And we got 1 tick on that. It did go down and hit the low down here, the price swing low. The next one was over here. We got long there, and we picked up actually somewhere in here on crude oil. Somewhere in here we stopped out. I don't know where that one is, but somewhere in here we stopped out, and we got -10 ticks. It was probably right in here. Right in here we stopped out. We got -10 ticks. That put us at -9, and then we got 5 ticks more right here. Put us at -4. That's where we ended it on crude. All right. It really did not have much at all through here. Okay, we didn't take any other trades on it. During the break, even during the break, it didn't have much. A couple of trades right here. All these would have been, well, this would have been a little bit of profit. This would have been a little bit of profit to a break even, probably combined with that one for a nice trade. This would have been a break even, and this right here would have ultimately gotten you into a break even trade, all 3 of those. So, I mean, there was no news today, so there's really nothing pushing the markets around. So far we were -4 on crude, and we were +4 on gold. So we're break even between those 2 markets. And then we got into the ES. Now the ES, when it went today, it was going okay. We started out here with a break-even trade on our very first one, and I was looking for it to get all the way up here, which it never did. It turned around, started going down. We had another break-even right there. Then finally, we got a trade in here on the ES. We picked up 8 ticks on the first trade and 6 ticks on the second trade right here. There were follow-up trades on this. I missed that follow-up trade, and I missed that trade right there to lead it. And I took this one. So we're at plus 14 at that point. I took this trade, but it was an accident. That's why it's a gray one. I had to sell stop limit on the down close of the bar, but when it gave the down close, the green got up into the black right there. And that disqualified any short trade. So I took it off with a break even right there. And that was it for the ES. During the break, there was nothing really good on the ES. Nothing. And so it's just been a mess, just like that today. It's been rough. Is Mark in here? Mark, let me go through and see who all is in here. Mark is not in here. Len H, you didn't show up in the morning session, did you? And G, Natalka. I'm just going through the people who are in here that I thought were going to be there this morning, but didn't get there. Anyway, so the ES now, we ended up with just 14 ticks on the ES. And the NQ now, we started off pretty bad on the NQ. Let's go all the way back to the beginning. See all these flat spots in there. It was not easy trading at all today. Okay, not easy trading at all. Steve S, I see you're in here. I thought we were gonna see you in the morning session today too, but I guess not. All right, so my first trade in here on the NQ was right here. Now I wasn't so interested in trading through here, part because it was flat and part because it wasn't going in the same direction as the ES. The indices were all screwed up this morning for, well, most of the morning actually. Our first trade in here was this one, and I stopped out. And our next trade was here on this one. I was at minus 20 after this stop out. Then I got 8 ticks back on this to put me at minus 12. Then I got 16 ticks on that to put me plus 4. Then, oops, didn't put that on. Hit. Here. Then I got 16 ticks to put me at plus 4. I got plus 8, then 16 to get to plus 4. And then I got 20 ticks to get to plus 24, somewhere in here. Then I had a break even. Then I stopped out again, went back down to 4. Then waited and waited. And this, I was doing training in here. That's why there were no trades. Well, that and the fact that it was all flat and nasty. I took a break even on this one. I was thinking it was going to get down here. We were looking for a lower swing. It did get down there. We took that one. It went from 4 up to 20. So that was another 16 tick trade. Then we took this one right here with 8 more to get us to 28. That was it. And look at how we ended the morning session. It was all flat right here. I was thinking when the European markets closed right in here, we'd get some more opportunity. And it did provide some more opportunity on the NQ. It really didn't provide much on the other markets, though. Okay, you can see there were some decent trades all through here, off the ribbon. Now, the highest probability trade is going to be this one right here. All right, we get the arrow off the ribbon. The arrow off the ribbon, highest probability trade. Okay, arrow off the ribbon. This one right here, that's not looking so good, but that is it. All right. It's 12:55, so I do have time to answer questions if anybody's got any questions. I'm going to go to the DT Pro right now, and Dwayne's going to get into this in a lot more detail, but looking at the weekly trading zones here, you can see this is the NQ, and we started out over here. We were here this morning. All right, and this area right here is what we're at, and I was saying it's got to get away from this. I don't know if it's going to go up or down. It was actually above this when it started out, and I highlighted this area saying I think it's going to get back down to here, and we'll see what it's going to do from there. Then it went all the way down here to this zone. Then it went all the way down here to this zone. So this was all during the break right here. You can see it's kind of hovering at that zone right now, and Dwayne's going to come on and give you a lot more information than I'm giving you right now. But given where it's currently located, a little below the zone and hovering over the zone, it's looking kind of bearish. And I would think that if it's going to continue in this bearish pattern, it'll get down here to 740 sometime today. Okay, that's what I would think on the NQ. The crude oil, this is the area this morning I was saying it should get up to, right? But it was stuck here at the zone. So we had to get away from the zone. And when we got away from the zone, we're really going to go down here. We're going to go up here to the midpoint. And we did hit that during the break. We got up here, crude finally had some movement and got up there. But you can see this morning was just garbage. The gold, we're right back at the weekly trading zone right now. Now we started off kind of at the weekly trading zone this morning. But we started off in here and I said, we'll probably get up to the zone or go down here to the midpoint. And we went right up to the zone here. We've been stuck at the zone. And I was saying this morning that I think by the time we get up here, the BBC is going to be down into the zone. That's going to be a significant area of resistance. And it'll probably push us down here to this level. So that's still what I'm thinking right now. Unless we get up above here. If we get up above the ribbon, if we close up above the ribbon altogether, then we'll probably go right up to the next zone. But for right now, I'm thinking we're going to be kind of stationed here. There's no reason for it to move all that much. Right? And then the ES. I think we're right here in the middle of the weekly trading zones on the ES. And what I was worried about this morning was bouncing back and forth in between here. Right? And I said, if we get down below there, look for the midpoint here to be a significant area of support. And you can see it just stopped right at it. And it's all jammed up there at that. It went all the way down to 4,000, just about. Missed it by a tick twice. It's going to bounce right here between the ribbon and this 4,000 level, I think, for a little while. And there's really nothing to move it one way or another. So, I'm hoping tomorrow, we have some high impact news coming out tomorrow. If we could jump over here and we look at that. This is today. We had no news today. Okay, and then tomorrow, we do have some high impact news. Consumer confidence is coming out. And we also have some low impact news and medium impact news in the pre-market. Okay, now this right here, he's due to speak at the opening ceremony of Bank of International Settlements Innovation. I don't think that's going to be a big deal for us. I don't think anything that's happening in the pre-market is going to be a big deal for us. But then once 10 o'clock rolls around, hopefully we'll start to see some action. Okay, now as we're coming into the end of the month, there are some things that got shifted around with the news events. As we come into the end of the month, the last day of the month is the last day. Is the last day of the week. The 31st is the last day of the month. So some things got shifted around, but we don't really have any more big news until Thursday. Okay, here on Thursday, after tomorrow. Then we have all that, and then Friday morning we have some more high impact news. The core PC price index is going to be a big one on Friday. All right, so it's 12:59. Now we're going to jump into the live stream now. To get into the live stream, you go here to my TradingView.com, go to Community, Live Streams, and we're in Upcoming Streams down at the bottom. Okay, I'm trying to scroll down there. We're in Upcoming Streams down here at the bottom. If you want to jump in the live stream with us right now, that would be great. If you don't, if you want to stay in here, that's also great. Hey, look. You click here, and you'll jump into our live stream. Okay, I'm sorry, there's usually some little cheerleader looking girl there. He's got very feminine hands. click on that, and this over here, I mean. you jump into our live stream. That's it, guys. With that, I am actually going to go into the live stream and start the whole thing over here. Let me hit refresh on this page, and if anybody has any questions, you can email us at support@mytradingiq.com, support@cfrn.net. Either one of those will work, and you can also call me. Pretty much everybody in here has got my phone number, so you can call me or text me. Don't call me, text me, okay? And I'll call you back. All right, so I'm about to start the live stream right now, and we'll jump into that. And the live stream should be coming up right now. Okay, let me close one other thing here that's probably hogging up a bunch of memory so it doesn't interfere with the live stream. Okay, I'm closing that. There we go. Okay, so we are in the live stream right now. All right, so for anybody that's in here in the live stream right now, I don't know what trading is going to be like today because it's been kind of messy today. We did end the morning session positive, but it wasn't easy. We did have some guys in the room that ended really positive, well better than I did. But I ended the morning session with plus 28 on the NQ, minus 4 on crude, plus 14 on the ES, and plus 4 on gold. And that was 2 hours of trading this morning. So right now, we'll see what we end up with. You see the long-term direction here, these outer bands on the NQ flat. Same thing here on the ES flat. On the crude oil, you got bullish separation right here between the long-term direction bands right here. So that is a good thing. And we're putting in a higher swing there. On the gold over here, we're finally breaking out of this chop that it was in. And the long-term directions are bearish over there. So that's a good thing there. So what we'll hope for right now is to get some sort of a pullback here on crude and continue the pullback and get a trade over here on gold. That's all we have going. Now, anybody who's in here who is on the live stream, if you have any questions about anything, if you want to look at any kind of equity or crypto or anything like that, you just have to type in the symbol. Okay. So right now, everything seems to be working properly as far as the live stream goes. If you are not following us and you want to follow us in TradingView, just hit the follow button. Okay. And if you do that, you'll be notified every time we publish a new live stream or we start a new live stream, and anything else whenever I do an update or anything like that to any of the indicators, you'll be notified of that too. All right. One thing that some people don't realize is when we do an update to the indicator, oops, I didn't do that. Hang on. When we do an update to the indicator, there's a thing in here that says about this script where I put release notes in it. Okay. Hope it's gonna load up. Not be too much of a problem. But there it is. Okay, you see I put release notes whenever I do an update in here. And when I do that, you guys will get, anybody that's following us will get a notification that I made an update. You can go in there to see what I did. If you get a notification that there was an update on, on either the TIQ context or the ultimate slingshot down here. Either way, you'll be notified if you follow us. Okay, so it's important that you follow us if you want to keep up to date with all that. All right. So today is Monday. So on Mondays, I can show you this. This is what our training plan looks like on Mondays, right? We go over the bar types, range charts, tick values, the different trading platforms, support and resistance, and the up and down closes. Now, the difference between the up close and the down close and support and resistance levels, we trade in between those levels, right? We don't look to trade at those levels. We look to trade in between those levels, going from one to the other. We don't enter a trade when we get to one. We exit a trade when we get to one. The longer term support and resistance levels. Like we have these things called the weekly trading zones that come out every Monday morning at 6:15 a.m. They've been coming out every Monday morning at 6:15 a.m. since 2009. Yeah, we've been around a while. So those weekly trading zones give you areas of support and resistance that you can use as targets. They're great to use as targets. And one of the other products that we have is Logic 247. That's here as Trader. So those two of the other products that we have. Watch over here on the NQ for the up close. Okay. It's still kind of flat in here, so we might not get any trade here at all. But if this pops out of the oversold, sorry, and the red stays off of the black, then we'll probably have an NQ trade right there. Okay. The red did not stay off of the black, so that is not an NQ trade right there. All right. So it's not going to give an arrow. That's what that means. If the black gets into the red, it's going to disqualify all bullish arrows. All right. You're not even going to get a white arrow on it anymore. And this didn't end up being a trade here on the ES because this was not oversold. All right. That was not oversold. So we're waiting for pullbacks right now. We really don't have anything else going on. If anybody wants to see an equity or anything like that, you got to type in. Yes, there is a PED. You can go to mytradingike.com and sign up for the trial there, and we'll send you all kinds of things. But if you're a beginner, then this is a great starting point for you. All right. If you don't have a whole bunch of baggage from all the other things that you tried all your life and didn't work, this is a great starting point. you should go to mytradingiq.com and sign up for the trial there. All right. You know, typically everybody that comes to us, they get to us last, and they've already had all kinds of bad habits and everything else that's never worked for them by the time they get to us. But right now, you know, we have everything pretty well defined, and it's pretty easy to do once you understand what you're looking at. Like right now over here, see, right now over here, you wouldn't do anything over here because the long-term direction is flat. Okay, right here, your long-term direction is bullish. Right here, your long-term direction is bearish. These outer bands, your long-term direction. You want to trade with the longer-term direction, the longer-term trend, right? That's the direction you want to be trading in. So what happens in the short term, you get pullbacks against the long term, and that's where you want to find your entry. Okay, and all of our indicators just point out precise entry points. Like the markets always do the same thing, right? They go up and down, they go up and down, they go up, and they should come down. And so what we find is we should get in and we should get out. And now as it's coming back down right here, we should get in and we should get out. And if this doesn't make a higher swing right here, then we stop entering in that direction, right? And we wait for it to decide to go down before we start going in the other direction, like this one right here. Okay, this one right here, we had to wait for that to go down right here, right? Like that. Okay, there is another live mic in here, Dwayne. I don't know how you managed to get it to work this time.
I'll hit mute.
Okay. All right. Let me hit erase all drawings right now, but that's basically what you're looking for. Okay. After 20 minutes of looking through support wikis, how do you contact support of what? Our support? Support at mytradingiq.com or support at cfrn.net. Either one of those will go directly to our support, right? Email is how you can do it. You can also contact us by text message. You can contact us by telephone. You know, our telephone is 949-423-6464. That's 949-42 Emini. That's our telephone number if you want to contact us there. There's a short here on the gold.
And our members have access to around-the-clock support.
They do. And if you do end up taking the trial with us, you know, you get one-on-one training with the trial. That's something that we offer to everybody who takes the trial, is one-on-one training, right? So if you're brand new to this, like Pete, you just said you were brand new to this, or you're brand new to trading. This right here, every time this goes down, one movement here is $10 per contract. I have one contract. So right now I'm locking in $20 in profit because I have 2 ticks that I just locked in with one contract. So that's $20 I just locked in. This is on gold. Now I anticipate that this is going to get down to this level right here, but just took me out with $20 in profit. And I'm okay with that. So I'll cancel this. Okay. Now what we do, everything we do has defined risk at the beginning of the trade. Everything we do. They all start off with a predetermined amount of risk. By risk, I mean you have a defined stop. So you're not going to lose. Well, you shouldn't lose. You could have jump stops, slippage, and stuff like that, but you shouldn't lose much more than your defined stop. So with a 7-tick range, the defined stop is 10 ticks. Okay. So this is a 7-tick range bar. This is a 7-tick range bar. This is a 7-tick range bar. This, because of the volatility, is a 16-tick range bar. So the defined risk on this one is 20 ticks. These are all 10 ticks. Now, what that means is every bar you see on these 3 charts is the same height. I know they don't look like they're the same, but they are the same. They're exactly the same. Every bar is 7 ticks high. Every bar on this chart is the same height, but they're all 16 ticks high. Okay. So, yeah. That's it. So this was our very first trade. I got to write that down. We just got 2 ticks on gold, right? And we don't have another trade set up anywhere yet, but the crude oil is about to set one up. The NQ is pretty close. The crude oil is about to set one up. Now this is the NASDAQ, right? And this is the mini S&P 500. This right here just set one up on the crude, and the crude is crude oil. This over here is gold, All right. So when you get a trade set up, what you want to see is it put it in a lower swing and continue the trend. Remember what I drew for you just a minute ago, where price goes down and then up and then down. So right here, I'm still waiting for this to continue the down part. We had the trigger part right up here, right? We had this move down, then it pulled up, showed us the trigger part right here. So now it's got to continue the move down, but we already took some profit on that. So we're not really worried about that one anymore. The crude oil right now, you see it had its move up, it's down. Right here was a trigger point. It moved up and down. And right now it's got a trade right here, right? So I should have my stop at break even on that. And I'm going to throw it at break even right now. Right. So now it's done this part on the pullback part of it. And so what you anticipate now is another leg up. And in Thursday's lesson, I go over the leg lengths. I'm just going to lock in one take on the crude. On Thursday's lesson, I go over the leg lengths because they give you kind of an idea what to expect out of a trade. Like this one right here, the leg length goes from right here all the way up to here on this last move. Okay. So if this move is going to be anything like that move, the same leg length, then that's what you'd be expecting. Okay, that move all the way up to here, which is out of range, out of view anyway, all the way up to here, 72.50. All right, now the DOM can't show you all the way up there at 72.50 yet, but let me bring my DOM back up so we can see where we stand on this. All right, here it is. So I have 4 ticks locked in on three ticks locked in on this. All right, so with crude oil, it's $10 a tick too. So it's only, I've got $30 locked in on this one contract so far. Right, and I was saying 72.50. If it's going to do the whole leg length, that's a long way up. It's way out of view right here. The high of the day is right here, so it's going to have to go through the high of the day to get there. So I don't have any risk on this trade right now. I'm definitely going to make money on the trade. I don't have any risk, and that's where you want to be in a trade. Okay, that's where you want to be. Right. If we get up above the swing high, which we should do right here, get up above 72.14, which is the high of the day. If we break above that high of the day, then that 72.50 number could come up pretty quick. Now, it made this move, this last move here. It took about 5 minutes for this last move to finish right here from the midpoint, the swing high right here. When it penetrated this swing high, it was 12.59, and to get all the way up here, it was 13.05, so it took 6 minutes. So we're going to get out of this with a little bit of profit. Okay, and we'll have to wait and see if it finishes that move. But the place it was saying it should go, the leg length says it should go up to here. All right, now I don't know if it's going to go up there. The chart, it says it should go right here. Right, the chart says it should go right there. The DOM says it should go to, there's 2 places, 15 and 20. So I'll just write down the 21 because we have one pretty close right there. The DOM says it should go right here. Okay. Now I'm not going to take another trade in this direction unless it goes through here. You see on back over here on the gold, it's finishing that move down. You see that? Remember I drew that line over there? It's finishing that move down right now. Okay, you see how that all works? And so the indicators are there to tell you when to get in here, when to get in here, when to get out, when to get in here and get out there. That's what the indicators are there to tell you, right? And we are here to guide you with the use of the indicators, right? That is what our function is, right? Now the NQ, it just gave this push down right here, and it's followed up by this push right here. We want to see it put in a lower swing, get down here below 74.25. The ES to get out of the chop right here. The ES is going to have to go much lower to get out of the chop. The gold did put in the lower swing. That's good if it pulls back up right now and gets into the ribbon. The highest probability trade is going to be an arrow out of the ribbon, like this right here. Right, an arrow off the ribbon. That's the highest probability trade. Okay. All right, so watch the NQ here. The NQ starting its push down right now. And here that is. Now that one, the stop goes to break even after 8 ticks. Okay, so we're in at 77. I'm gonna lock in 4 points. That's 16 ticks right there on the NQ. Okay, so that was a down close from right in here, I believe, somewhere in here. And put that on. so it did put in the lower swing. Now the ES is also putting in the lower swing and starting to spread the gap up here a little bit right there. Okay, you did want to see that. I mean, you do want to see that. That's exactly what you want to see. Now in here on the crude oil, it just gave a long, but it did not put in a higher swing. So I'm not really interested in this long trade right here. Okay, it's probably going to work out, but I'm not going to take it because it's a lower probability trade because it didn't come off a higher swing right here. I do think it's going to go up, but I'm not going to take it. I'm not going to risk it. Okay, you want to take the highest probability trades and skip the low risk trades. And that one's a lower risk trade because it's not coming off a higher. Okay, does anybody have any questions about that? Again, does anybody want to look at any kind of stocks or cryptos or Forex or anything like that? I can jump to another chart if you want. All right, we're in the overbought area we are on gold right now. So it's done the pullback. Remember, price is always doing the same thing. So where's it going to stop? Up here at the ribbon? Maybe. If it doesn't stop there, what do we expect? We expect it to drop down below this level, right? And when it does that, we expect that to go down, right? Anybody with me on that? Okay, I mean, we do the same thing again and again and again. Every day we've been doing this stuff for over 10 years. So here it is, right there. Okay, there it is on the gold. There's your chance. And what should that do? Well, I just told you it should get all the way down to here at least, right? Prior swing low, it should get down to here at least, 53.4. Right? So here's the trade. And we'll see what it does. Now, once again, every trade on a 7-tick range, every trade starts out with 10 ticks of risk. I left that stop up there. Every trade starts out with 10 ticks of risk. All right, so if it stops me out at minus 10 ticks, then that's fine. It stops me out at minus 10 ticks. So I'll know that it's not going to continue in that direction. Back over here on the NQ, we did put in a lower swing on the NQ, so we might get another trade over here to continue the trend on the NQ. We're going to need a down close here. We want to see this drop out of the overbought. That would be the highest probability trade if that happens. Okay, so this has got a high here of 80.75, so it'd be 76.75 is what you'd be selling on that. Okay. Hang on a second. I'm still trying to put this on. Here we go. Okay, so now it's 82 down to 78 right now. And now it's changing direction, so it looks like. I don't know. We'll see if it does or doesn't. Back over here on the gold, it's got to get 4 ticks in profit to hit the stop to break even. All right, so it's got to go from right here down to right there. Stop at break even on the gold. All right, I'm going to lock in 1 tick on the gold. And where should the gold go to? Well, I already told you one place it should go to is right here, 53.4, right? So I'm out with 1 tick, but it should go down here to 53.4, right? Even though it took me out with the 1 tick. Now, there are different ways to manage trade. One way is to look at the prior swing. It should go there. The other way is to watch this green line. That's the slowest way. The green line should go from overbought to oversold. Oversold to overbought. It should go up and down like it is right here. Right? That's the slowest way to exit the trade. And the other way is to look at the DOM. Now with gold, you can only see 10 spots out, so you can't really read all that much into the gold. So I always look for the lower swing to begin with. That's 53.4 right here. All right, so we ended up with another positive trade right there, but it's only 1 tick. Okay, and we didn't end up with a trade here on the NQ. We didn't end up with a trade on the ES, and the crude oil did end up moving up, and it did put in a higher swing. So that's good. It hit all those numbers. And now if we get another pullback, remember, this is the leg length up here. All right. For any of you guys that are in the trial right now, the leg length is on, oops. The leg length is on, I think it's on Wednesday or Thursday's lesson. For anybody that's on the trial with us right now. If you are not on the trial, go to mytradingiq.com and sign up for the free trial there. Okay, mytradingiq.com, you sign up right there. So right now you see it starting to pull back here. We're going to be able to, well, it's going to have some sort of a pullback. It's dropping out of the overbought, and we want to see it get all the way down to the oversold perfectly. I don't think it's going to happen, but we'd like to see that. Okay, what time is it? It's 1:21, right? So again, we're running out of time. This half an hour goes by pretty quick. If you guys want to do this 2 hours a day, we do it every morning, 9:30 to 11:30 Eastern time. And if you want more of it, just take the free trial and sign up there. Right, so both of these markets are turning around, and neither one of them gave a short trade from in here. Right, the gold should have put in a lower swing right here, so I'm not interested in another trade. That it's going to give another arrow here if we drop out of the overbought. It's going to give another arrow here, but I'm not really interested in that move. Right, it should have put in a lower swing here. Should have gotten down below there. The crude oil, if we had pulled back deeper here on the crude, I'd be more interested in it. But there's a chance it's going to go all the way up here and finish the leg length without giving us another trade setup. And if it does, it does. And we've already made money. You have to control the greed and expectations. See, I'm looking for a deeper pullback here on the NQ. I'm not doing that right there. I don't think either one of these are really changing directions yet. Either the indices here. That's what it's suggesting, is that they're changing directions, but I don't think they are. Not yet. Okay, so the gold did not pull back deep enough to give us another trade setup. And this is the level that I thought it would get up to. So it hit both of these, one based on price action, one based on the DOM. And this is based on price action also. Okay, and look down here. The green line got from the bottom, from the oversold up to the overbought. Now this up here at the overbought, it's time for it to pull back down and get all the way back down into the oversold. Okay, but it wouldn't surprise me if it finishes this leg length before it does. Now, when I do the leg length in the training lesson, you'll understand more how the market flows and how to look for the market slowing down when the leg lengths change. Okay, anticipate all these things. All right, so it's 1:24 now. We have about 6 minutes left this session. Now, I have a whole bunch of things going on, but if anybody wants to meet up with me, part of the trial is one-on-one training. Watch for the NQ commodity oversold here. Part of the training, part of the trial is one-on-one training, and so if anybody's in here who's on the trial and you want to get together with me, you got to let me know because my spots are filling up. Definitely for today, they are. Right. Now, we're looking for the up close here to pull this out of the overbought to give us a trade here on the NQ. I'd still rather see it pull back a little bit deeper right here. I'm still not really convinced that it's going up yet. The gold did not finish moving down right here, and the crude is starting to pull back again. If you are in here and you're on the live stream and you're not following us, if you want to follow us and keep up with what we're doing, just hit the follow button. You'll be able to follow us pretty easily, I think. So far today, it's been a pretty slow session. We are right now +2 on gold, +4 on crude, and +16 on the NQ. And we got nothing on the ES so far. Okay, and that did, while I was looking down reading that, this did pop out of the oversold. So I'm still not convinced this is going up. If it goes up right here and it breaks this swing high, then I'll be convinced. But I'm still, the indices, I really don't think they're moving. And given the way the day has been, I'm kind of happy to be positive at all after this half-hour session right now. We have about 5 minutes left, so we'll see how it goes here in the next 5 minutes. All right. I want to see it break this swing high here. That would give me a little more confidence that it's actually going to start moving up. If you look at these things on a little bit bigger picture. Yeah, you see it's sold off right here, right in this area right here. It's sold off a bunch of times. 1, 2, 3, 4. Why not now? If it does break through, I'm not sure what the weekly trading is. Weekly trading zone is above this, but what we had done in the larger time frame is we'd gone up to a weekly trading zone, then bounced back down to the midpoint between the zones, and then we started to hover there. So, all that stuff we went over this morning in the room this morning. I get an idea for what to expect out of the markets on the bigger picture. And pretty much all of it's been pretty accurate today, what we're expecting and what happened. All right, so on the gold, we have a red arrow right here. Now what the red arrow indicates is that on the bar before the arrow, both of these lines here were overbought. What that suggests is that this green line, green and red line, remember it's going from overbought to oversold. So when it's overbought, it's got a bigger leg down coming to get it to oversold, right? Like this one here went from oversold up to overbought. And this one over here went from overbought down to oversold. This one here on crude oil, you watched it go from here, from oversold up to overbought. That's what you'd be anticipating, a bigger leg down, right? That's what the red arrow indicates. I don't see any questions coming in. You guys are a pretty silent group today. There's plenty of people watching, but that's the way the markets have been too. They've been pretty quiet, so can't expect too much. You got just a couple of minutes left, and then I'm going to wrap it up. All right. Let me go back in here and make sure I answered all the questions in here. Buyers of orc. I believe I answered your question. I don't know what the color means. I don't know if that means you logged off. Appeed, if you sign up for the free trial, you may have done it by now. I don't know. But if you sign up for the free trial, you'll be sent all the information you need to get everything set up. And then we'll meet one-on-one to actually set up your charts, to make sure your charts are set up. If you do take the free trial, look at gold. It's got to put it in the lower swing right now. If you do take the free trial with us, at the homepage at mytradingiq.com, in the upper right-hand corner, there's a thing for trading platforms. Yes, I can go there. It's right here. Go here, click on trading platforms. That is where you get the information to download the TradingView stuff and give us your TradingView username. And then click on trade rules. This is how you set up the TIQ context. Watch this video. Set up the TIQ context. These are all the sensitivity settings. By default, your TIQ context is going to be set to TIQ context sensitivity is going to be set to 0.35. But depends what market you want to trade. There's different levels of sensitivity depending on the volatility and the actual range of the markets. But every trade, there are only three parts. There's the entry, the risk management, and the exit. Now I go over all three of those right here for you using our indicators, our software. How to manage your trade, how to get into the trade, how to manage a trade, and how to exit the trade. Okay, it's all right here. Go to mytradingiq.com. That's on trade rules. Make sure you download the trading platform too if you're going to take the trial. All right, so back over here, the gold did not put in a lower swing, so I'm still not interested. Crude oil is still working its way up to this level up here. The NQ, we want to see that put in a higher swing right here to continue that trend. It hasn't done that. And the ES is just barely doing it right here. So the ES and the NQ are both due for a pullback right now. Right, it's now 1:30, so I got to wrap up this session. All I can say is look for the pullbacks here on the NQ and the ES and on the crude oil. They're all overbought. Look for the pullbacks because they all have long-term trend. Long-term bullish trend right here. All three of them now have bullish trend. And on the gold, you want it to go down further before it pulls back. You want that to continue down a little bit more and then give you a pullback. Okay. All right. Well, I guess I'm going to have to wrap it up. It is now 1:30. I've used up my 30 minutes. We did have a couple of decent trades in here. Well, not really. We had some small trades in here. We only had 4 trades. And they're all pretty small, but it's okay. Look, this right here on the NQ. Hang on, this right here on the NQ. Be a long opportunity. It's bouncing off the ribbon. It's not going to give you an arrow off the ribbon in this case. Okay, it's not going to give you an arrow because this is not oversold. All right. So here, I'll bring it over. We'll just do one more trade here on the NQ. Here, I'll lock in a point on that. Okay. And where this should go, it should go up above the prior swing high. It should go above 1350. So it should go all the way up here. Okay. But it just gave me a tick. I'm not a tick, a point. Sorry, 4 ticks. That's where it should go. It should go up here. Okay. Let me write that down. And gold does not put in a lower swing. The crude oil is almost up there. It's almost up there, guys. So it's taken for, what did I say? It took 6 minutes after it broke the swing high. So this one, after it broke the swing high, it's now 12 minutes. It's working on 12 minutes now to get up to that level to finish the leg length. That's all I got. You're gonna have to wait. Bart, what's the difference between the red or black trading arrows on the red one? Every red one is also a black one. Okay, but the difference is on the bar before the trigger arrow. Both of these lines down here were oversold or overbought, depending on what direction you're going in. Okay, it'll be red if they're both overbought or oversold. In this case, they're both oversold, and that means you should have a longer leg. All right, because you want the green line to go from the bottom up to the top. You should have a longer leg. And you see it's just finishing up that leg length right now as we wrap up. So that worked out perfectly. We just didn't get into the trade. Watch for the gold to move down some more. Now that we've gotten all the way up here on the crude oil, I would look for that to pull back. The pullback number on the crude, the first pullback number that I see on the crude is 72.40. Okay, so this is the first pullback number that it should come down to. Below that, it looks like 72.36. Okay, that's just what I see right now. And that'll all probably change. I'll draw on the 36 for you. But you guys are going to stop looking at this in a minute anyway. All right, that really is going to wrap it up for me. Let me get over here. I've talked too much again. If you guys want to take a free trial, go out to mytradingIQ.com, sign up for the free trials right there on the homepage. With that, you get access to the indicators, tax 101 training, and 2 hours a day in the room with us. Right? 2 hours a day in the room. It really is free. We don't even ask for a credit card. It really is free. All right. That I'm going to wrap up the live stream. Hit stop stream. And there you go. You can pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Is the red better? It usually is. It usually is, Bart. Okay. All right, Dwayne, you have it. I don't hear you, though. I think your audio is muted.
Recap of the recap from the morning session.
There it is. 18 minutes, 4 trades, $390.
Good job.
Thank you. Thank you.
Okay, guys, we'll take one more quick peek here at the daily chart. Got a little bit of green body on that daily candle, but we know resistance, potential resistance at the high of today. Then you got blue and climbing. Okay. All right, we've covered all the other markets. So if you've taken your trial and you're ready to become a part of a very vibrant community, a family, support around the clock. This isn't buying some indicators and a PDF and, you know, a virtual handshake and a pat on the back. This is about, again, becoming part of our family, a vibrant community, one that's been growing since 2005. You just go here, eminifuturestrading.com. Couple mouse clicks. You're a lifetime member. No recurring fees, no upsells, no new shiny objects to buy from us, ever. Because we provide everything a trader needs, all under one roof, at one low price. And that includes something you'll find nowhere else: unlimited one-on-one private mentoring, round-the-clock support. Strategy that you learn is fluid across futures, stocks, crypto, forex. Same with the indicators. As a passport holder, you receive the Logic 247 alerts around the clock, concierge trade alerts every evening when they're posted, and you'll be able to join us on Thursday nights in the members-only workshop. EMiniFuturesTrading.com. Let's wrap it up with our good word for the day. Some of us are stuck in jobs we don't like. That's why many of us wanted to become traders. But as we transition, we have to be faithful to God at work, even if we're in a job maybe we don't like so much. Colossians 3:23. Whatever you do, do it from the heart, as something done for the Lord and not for people. If you are in charge of hiring people at work, what would you look for? Skill, dedication, punctuality, reliability, patience, kindness, and consistency? Well, Jesus said in Luke 16:10, whoever is faithful in very little is also faithful in much. Life mostly consists of little things. So if you're unfaithful in little things, you'll be unfaithful in most of life. Do you possess a guilt pile at work? It's that little stack of items you just haven't got around to yet. Faithfulness includes how you handle it. It may not matter much to you that someone has sent you an email or written you a letter, but that person anticipates an answer. Their world may be counting on it. How do you manage the little things in life? Jesus said, and if you have not been faithful with what belongs to someone else, who will give you what is your own? You own the business you work for. Would you be taking all those extra coffee breaks? Would you buy the rental car you just abused for a week? How you handle things that are not yours is a test of faithfulness to God. See how sensible this is? Faithfulness is important in all areas of life. God says you will be rewarded for your faithfulness. So do your best at work. Whatever you do, do it from the heart, as something done for the Lord and not for people. As a follower of Christ, you should have a reputation for being the most dependable person on the job. Why? Because you're aware of who your true boss is. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.